Welcome to the Daily Update Podcast, where I'll go over the action in the market for Friday, May 30th, and we'll see how things look for Monday, June 2nd. The S&P 500 started the day in negative territory, but found support at the S1 level of 58.76. It rebounded up to the daily pivot at 59.10 before closing nearly flat, down just 0.01%. Trading volume was above average, marking a down day though. Despite the lackluster close, the S&P posted a strong 6.2% gain for May, recovering from April's decline with a modest year-to-date increase of 0.5%. The technical indicators paint a cautiously optimistic picture. The S&P remains above its 20, 50, and 200-day moving averages, signaling positive short, intermediate, and long-term trends. However, the average directional index, or ADX, remains below 20, confirming a lack of trend as the S&P moves sideways. The VIX, a measure of market volatility, closed elevated at 18.57, but below the critical 20 level. Momentum oscillators are mixed, with the price momentum oscillator still extreme positive but declining, while the NASDAQ 100 bullish percent index remains strongly positive. Turning to economic reports, Friday brought a slew of data. Personal income rose 0.8%, surpassing expectations of a rise of 0.3%, while consumer spending met forecasts at a 0.2% increase. The PCE price index, a key inflation gauge, ticked up 0.1%, with the core PCE year-over-year cooling to 2.5% from 2.7%. Consumer sentiment improved to 52.2, beating expectations of 50.8. However, the Chicago PMI disappointed at 40.5, below the expected 45 level, signaling continued contraction in manufacturing. The trade goods deficit came in better than anticipated at a negative $87.6 billion. Market drivers included lower interest rates, with the 10-year yield at 4.41% providing some support. Volatility spiked mid-session due to tariff news and President Trump's comments on China's trade agreement violations, though his later softened stance helped calm the markets. Sector performance was mixed. Utilities led with a 1% gain, while financials, healthcare, and real estate saw modest increases. Energy weakened, and tech as well as discretionary underperformed. Market sentiment cooled slightly, with the market sentiment index dropping to 62 from 64. The market lacks conviction, chopping sideways with mixed momentum signals. Growth-to-value ratios are improving, but are showing early warning signs, particularly in the weakening discretionary-to-staples ratio. Looking ahead to Monday, June 2nd, no major trend changes are expected. The S&P remains positive but not trending, supported by its moving averages. Key events to watch include Chair Powell's speech from the Federal Reserve, the S&P Global Manufacturing PMI, ISM manufacturing data, and construction spending. Geopolitical or trade-related developments over the weekend could lead to a gap up or down at the open, so stay vigilant. In conclusion, the market remains positive across short, intermediate, and long-term horizons, bolstered by its position above key moving averages. However, a lack of a clear trend, coupled with mixed momentum and sentiment signals, suggests caution. Investors should monitor upcoming economic data and geopolitical news closely as we head into the new week. Thank you very much, and I will talk to you in the next podcast.